5. This board has written and supports a land acknowledgement and an anti-racism statement that we have posted on the Sudden Valley website. Roll call. Noel is not here right now, and Joel Dobbins said he was going to be a little bit late.
Don't forget Andrew.
Andrew Entrican.
Oh, Andrew Entrican, yeah, sorry, is gone as well with an excused absence. All right, do we have a motion to adopt the agenda?
Move to adopt the agenda.
Second.
All those in favor? All right, moving on. Do we have any objections to the consent agenda? Hearing no objections, those are approved. Moving on to announcements. Does anybody have any announcements?
Mr. President, we still have a vacant position on the board of directors.
That is true.
The application is available on the website if anybody is interested. Linda, what is the close of that application deadline?
You're on mute, but I think it was the 8th.
Oh, okay.
It's April 8th. The girls haven't received any applications that they've emailed me or anything, so. And I know that it's going out in the e-blast. And I know it was, or it should be showing up in the views when it gets printed and out and done.
All right. Any other announcements? All right, then. Moving on, we have our first round of property owner comments.
Okay, just a handful of attendees tonight. Looks like 5 with us. If anybody would like to jump in for property owners comments at this time, just use the raise hand feature in Zoom. We'll bring you right over. And if you're unfamiliar with that, that should be towards the bottom of your screen in most cases. On the app, I believe you just tap on the screen and there should be an option there. All right, not seeing any at this time.
All right, thanks, John. They got a chance to speak at the end again. All right, I will hand it over to Glenn now for our general manager's report.
Okay, thank you. First, wanted to point out we've updated the GM written report, and this is phase 1. So we've prettied it up and hopefully make it a little more readable. And then in the next one, next month, there'll be a couple of infographic pages with a lot of numbers information, so that and some of the things you guys have already requested, and we'll be looking for feedback once that comes on do those numbers make sense? Is it the information you want? So we want to get the report to where we're getting it out for you and for the public, of course. We want to make them meaningful numbers and easy to look at. So I want to thank Lauren for that. She's done a great job of putting all that together, and infographics are on their way. A couple other things. Wanted to bring up and this is not something we slipped in, but I wanted to bring it up here, is that as in 2020 with the Canadian wet slip issue where they can't come over the border and use them, we're proposing to do the same thing this year, where we sublet those to the wait list, and they can reserve them for the future year with a $100 holding fee. We had 14 of the 20 last year take advantage of that. And so we wanted to offer that program. Again, it adds 1,400 in our in revenue in addition, but also it helps us make sure that those slips are being used during the summer. We have no idea when the border will open, but I don't think it's going to be anytime soon. So if no one has a problem with that, we'll continue with that program. And then wanted to let you know that I have gotten a couple of proposals from communication consultants, and I've chosen one. It's under $5,000, and so I'm going to get them working for us, and I'm going to use the GM's discretionary funds to do that, because I think it's just something we need to get on, and we'll be working with the she'll be working with the communications committee along with Oryx and Lauren to get some, to see what we do, make some recommendations on how we can improve. And then ultimately we'll bring a report to the board as a whole on how we can improve our communication program. I did, this is just referring to the written update under mine, the general manager, where we talked about the working on a memo of understanding with the county to do a water quality vault in our area. They're going to do it on Marigold Drive right here by Lake Louise. Coming down the hill, they'll improve some of the stormwater and then put a vault in. They're currently in design, but in order for them to move forward with the project, they need a memo of understanding with us. We have one, we've reviewed it. Richard and I have both reviewed it, and we're going to bring it to you on the 8th to take a look at and consider approving. And I'll give you all the details then, but I wanted to let you know. After the meeting, we will post this on as part of the minutes, but I'll also forward you a preliminary map of where the site is so everyone's familiar with it. And that's all I have tonight, unless you have any questions.
Oh, I've got one for you.
Okay. Linda.
So Glenn, this stormwater work that they're going to do, is that going to be done this year, this summer during the building season and stuff? Or is it that it's not invasive, that it'll be under the 500 square feet, that sort of thing? Or you still don't know from them?
Yeah, it'll be done likely in 22, I think, because they're just starting design.
Okay.
So we've met out with them a couple of times and looked at the area, and they just signed a design contract with Wilson Engineering.
Okay.
So we're looking at least 22, depending on what problems they find. But the positive thing there is this is your stormwater fees at work. So
yeah,
and then they will maintain it. We won't be
Okay.
maintaining it either.
Any other questions? All right. Well, Glenn, thank you for the updated general manager's report. And if anyone has any feedback, you can feel free to email it too. All right, moving on now to our treasurer's report.
Thank you, AJ. As the treasurer, I don't have anything to announce other than our monthly meetings are going well with our new committee and everyone's learning their roles. And with that, I am going to hand the meeting over to Joel to share his screen so that he can go over the January financial statements for us.
Hey, I'll just turn the screen sharing on. As soon as I find it. Now, can everyone see this okay? the balance sheet.
Top part there. Yeah, it's not quite full screen. Okay.
How's that?
It's beautiful, Joel.
Yeah, it's going to be good. You may have to move it down when you get into member equity, but other than that, the rest of it you can see.
Okay, yeah. Okay, so I'll just start off with the balance sheet. Since we're just in January, the very first month of the year, this won't take as long. So what you're looking at right now is page 4 of your packet, the agenda. It's the balance sheet, which just has assets and liabilities and equity. Of course, the big thing with this is just the fact that their net operating assets are positive, which they are nicely, so that's fine. There's of course, I pointed that out before. I'll talk about this a little later on when I get down to financial statements, the PPP loan liability, that $357,700, which is sitting in the operating liability section, loan liability. So just remember that. Then in terms of the rest of this is just showing your capital cash balances here. And then your equity fixed assets up here, SURF loan, and then your equity down in here. But everything looks fine in terms of the balance sheet wise. Now, if I go to the next page, so for you, which is page 5. So the good thing about this is, a lot of times I'll talk about like the current month and then the year to date, but in January, the current month is the year to date since we're just talking about the first month. So I guess I'll just focus on this year to date column, which is the same thing as the month to date. Now the collection rate is, so we finished out January collection rate at 86.7%. Last year at the end of January, we finished it out at 86.5%. So for the month of January, we're tracking it's very similar to how it was last year, just a couple of percentage points higher actually in January. Now in terms of the net income right here, the operating net income, so 155,476 last year at the end of January 2020. So when I say last year, I'll obviously just be talking about January 2020. So last year it was 94,044. So we've increased how we are at the end of January over last year in terms of, so we're better than budget by 45,184. Now last year we were worse than budget by 8,218. In terms of expenses, okay, so for expenses, we're better than budget by 37,243. Last year, we were worse than budget for expenses by 7,071. Of course, I talk about the expense to revenue ratio every month, and that just basically means for every dollar in expenses, how much did you have in revenue? So basically, if you had 90 cents in expenses for every dollar of revenue, then your operating expense to revenue ratio would be 90%. So you want a lower number is always better in this case. So expense to revenue ratio at the end of January 2021 was approximately 60%, 60.1%. The end of January 2020 was higher, 74.1%. Of course, we'd expect to see that since the net income was lower in January 2020. Now, in relation to like December 2020, of course, we ended the year with an operating net loss, so it was 102%. Now, the next page on page 6. So this is just a capital reserve fund. It's just a snapshot of your SURF roads, just your reserve funds, and here are your operating reserve funds. Emergency ops, UDR in this section right here. That net available cash up at the top. So basically your starting number will always balance back to your any cash balances over here or in this area, your December 31, 2020, any balances. And then this column here, January 31, 2021, these numbers in this section will tie back to these bold numbers down here. So that's how you get that's how you could tie them back to the balance sheet. But this is just basically, it's just showing you that the money coming in, obviously the biggest line item is dues and investment income that we get from our accounts. This expenditure column is going to be a combination of any expenditures or capital expenditures, so a combination of both. And then dues outlook, and then the big thing is this obligated expenses line item right here. So this is basically, if we look at SURF, 404,344. So at the end of January, that's everything that the board has approved. So open capital projects and any amounts that we haven't yet spent yet. So it basically treats any open capital projects as though it's all going to be spent, like on budget. So like, for example, the board approved 100,000 capital project and that was it. And we had spent 50,000 of it. Then under this obligated expenses, you would see the other 50,000 as an expenditure or as an anticipated cash outlay. And then with your board recommended carryover balances, 600,000 for SURF, 500,000 for roads, gives you your net usable kind of forecasted cash at the end of 2021. So in this case, SURF would be 1.9 million, roads 2.4 million, so on and so forth across all these different funds here. Now the next page is a good thing on pages 7 and 8. So this is the current month, and then page 8 is the year to date. But this month we don't have to worry about this because the current month and year to date are the same. So we'll just look at, oh, what the heck, I'll just look at year to date. Same thing though, it doesn't really matter. So I'll talk about golf first. Golf at the end of January 2021, 185,149 in revenue. Last year at the end of January 2020, it was $158,681 in revenue. Now the revenue numbers for golf will always look higher in January because in the preceding year, October, November, December, that's when golf is basically selling annual memberships. So they start to sell these annual memberships that pertain to 2021. So then during October, November, December, then they go on the balance sheet as a liability. Then first thing in January, just what we've been historically doing is then recognizing it all in January as income. So that's when it hits the income statement, basically. So we're up 26,468 from January 2020 at the end of January 2021. Our expenses for golf, which is, as I pointed out before, is a combination of the salary benefits, combination of actual other expenses. So this number and this number, if you add those two together, then you get 46,344. And last year they had 46,881. So they're tracking pretty close expenditure-wise to last year. They're about $537 less than last year. Net income, so they had 138,805 net income at the end of January. Last year they had 111,800. So they're better net income wise by about $27,005. Maybe a couple other things I'll point out on this. You might notice, like for example, the actual salary benefits column, they all look positive in this case. And this is because this is basically just an accounting treatment, what needs to be done. The first payroll in January, what I'll do is I'll look at the first payroll in January and basically estimate how much of that really belongs to payroll that applies to 2020 in December. So then I'll accrue that back into 2020. And then that makes the first payroll in January look lighter. Now, at the end of the year, the opposite happens. So like if you looked at December 2020, you would probably notice those payrolls were higher because it took that accrual. So meaning it balances itself out between the January and the December payrolls throughout the year. But the January payroll or payroll expenses over here will look better in this case. Now, net better, worse here in terms of like what department's tracking off budget. Really, the only noticeable thing for me to point out is this ACC security. So it looks like they're under budget by 28,390, meaning worse off net income wise than what they were projected to be. And the reason behind this, like when I took a look at this, John Gordon, the ACC, who does all the inspections and stuff, and then he'll send us invoices. Usually we'll get a big batch from him like in January that pertains to 2020. So then at that point, when it was going through AP, I had Davey and AP like recode those back into 2020, which she did. The odd thing was the system recorded that it was recoded in 2020 under the check register, but for some odd reason, like a glitch or what in the software, caused it still to fall in January. So what I've done is I've done a corrected journal entry to move approximately 30,000 of this back from January back into December where it really belongs. So, so if I were to recast this, then ACC security, which I've already done actually, ACC security comes in a little positive for the month. And now any of these amounts over here, like net income, basically this, you're looking at the income statement. I've pointed this out before, but like, for example, the income statement for the whole organization right here, like you'll notice this net income loss, 155, 476 before UDR. Then if we get into the departmental income statement, see there's this amount here again. So, but you're just looking at the same thing, only recast by departments is how you're looking at this. But I would say in terms of the financial statements, those would be the big highlights of the financial statements. Anyone have any questions on those?
I have a question, Joel.
Sure.
On page 11, the capital project report, on the line item supplies and outside contractor, there's 30,967 over. And I was curious as to what happened on that project where it's 30,000 over on the
You said
capital project report.
page 11.
Yeah, page 11, there it is.
Oh. Okay, so what you're looking at right here is, so basically these are the capital reporting spreadsheets. So I'll just point out real fast before I answer Ken's question. So like, for example, here's the SURF. Now basically you have the board approved amount, this green column here. You have what was invoiced out in the blue one, which gives us just the board approved minus everything that we received invoices. Then it gives you basically what's left over, this 404,344 for SURF. And then if you're to go back and look at the cash page, here it is right here under the SURF. So that's the obligated expenses. But now to go back to answer your question, Kim, what you're looking at right here, this is a capital project that will be closed for both the reserve study and the 2020 audit. But this is the CVC work is what you're seeing for 2020. And CVC is split up into two different codes just for our internal tracking purposes. This top code that you're looking at is just for supplies. This bottom code is for wages that we pay out for this. So it's basically the real, in terms of whether or not this project is over or under, is a combination of these two. So it's actually under by $33.
Got it, thank you.
Yeah, there's a little footnote here that talks about how they're the same project.
Okay, thank you.
Yeah,
I have a question.
sure.
So back to that page 11, and well, I don't know if it's on page 11, but I was asking you about that marina stuff last week. Do we typically, or is this typically how these reports or capital project reports are, as just kind of straightforward, or would it make sense to have any kind of information regarding these projects as far as where they're at versus just being open or closed?
Oh, yeah, in terms of like, you mean percentage of completion?
Yeah, or just some kind of brief note about the project.
Yeah, that, and in terms of like what percent of completion this is in terms of actual construction, that would come from whoever the cost manager is in this case, or the project manager.
Okay.
From my standpoint, I'm looking at the financials of it, how it's tracking.
Right. No, that makes sense. Just looking at it now, it's like I'm curious, like where are these at? You know?
Yeah,
I think we could put like a form together pretty easily, Josh. The county does like it's like a little narrative and then kind of a status update of where it stands in the various, some projects have phases, some don't, blah blah. But we could probably put something together that kind of goes with these that shows all the open projects and it gets updated like quarterly or whatever.
Okay.
Or just, or put it on a drive for the department managers that are running those projects to look at this. And there could be a column and then they can have like a percentage, like if it's 50% done or 60% done, that way you'll have a visual in the same sheet. It would be nice if it were in the same sheet, but anyway, that's just an idea.
Linda?
Talking about all these capital reports still, how much of this stuff is closed? Because if I look at just the roads page, which is page 11, we've got the windward retaining wall design that's from 2016 that I'm sure that 17,000 isn't obligated anymore. I wonder if, we need to get Glenn and some of the managers together. A lot of these projects, if you look, that are open are, let's see, one's from 2016, two are from 2019. And I realize the Barn 7 is still open and still obligated, but our 2020 roads on call engineering should be closed, I would think.
yeah,
I think
it is.
the retaining walls done. I'm just saying, I think they need to get in here and really take a look at some of these and close some of them, because it will cut down on the amount of obligated funds that we have, because it's already paid in full and we're under budget.
Yeah, and like how this works in terms of closing these things out. So this is basically another step in the year-end audit process, and this is going to happen here pretty quickly too. And usually what I'll do is I'll have like Tyler come in, and I've already had him do this once this year, and I'll ask him, because like, for example, on some of these, like let's just say Windward Drive retaining wall, especially if there's a lot open, I'll ask, hey, what's status on this? Can I close this thing out? And then Tyler would, because he knows like the status of these things. And then how it ends up happening is I'll literally just close them out at one shot. So like, for example, when the reserve study guy comes in and starts his work, then he's going to need to know everything that was closed in 2022. And it happens, like when it happens like really quickly, like in one time.
There's so many of them hanging open right now. And I realize that's partly because, at the end of 2020, we were in transition as it was, but there's a lot of this, I realize like in surface, I know there's still a little bit of the irrigation system to go. I think all the quiet pool furniture, I think that should be closed, but the pump house equipment's still open. And there's utility vehicles, and I know Jake's with us tonight. I know he asked for a bunch of money, and it's like there's 83,000 left in those utility vehicles, and I wonder if we didn't buy something that was in that batch of vehicles to be bought. But other than that, and in the UDR, I would hope that the Area Z mitigation could be finally closed. I think that's all done. But like I say, I think this is something that Glenn needs to sit down and look at. And like you say yourself, just so that we're not assuming that we have obligated expenses that really aren't.
Yeah. Like for example, with the that roads on call engineering, here's a good example to where this thing is all spent out. So there's nothing obligated for this. And the UDR thing, so hazardous tree removal. So I gave the file to Susie with this, and some of these trees do pertain to this code. Yeah. And Glenn also.
Yes, and they still need to come out. You're absolutely correct.
And I also told Glenn about the Area Z mitigation, the possibility of maybe using this for anything. And I know he's going to take a look at this.
So Linda will,
The only other thing I had a question about, but it's for the board. On the surf projects, we have the golf cart fleet with a date of 2/8/21, and I thought we approved those cars before the end of 2020.
Yeah, you did.
And I thought the first payment had to go out in December.
I can answer that question. So yeah, you're right, Linda, that the cards
Okay.
were approved in 2020. But we actually did not take possession of these cards until January of 2021. So we did not make a payment until 2021. It was either sometime in, it could have been actually, because when I did this approval date, I basically put this in as the date that it was signed at the time, like the board motion was signed and signed off on. But we didn't
I
take.
could
Wow,
I could
so
speak to
we-
that too.
I'm just saying, for instance, if I go back and I want to find that paperwork, like what we have in this packet tonight, if I go back to 2/8/21, I won't even find that there was a board meeting that night, because normally this
Oh.
is its approval date.
Yeah, now,
And it's just, that's why when you do that, it really kind of messes stuff up.
yeah. Now the reason why I put 2/8/21 is now from memory, and I'm pretty certain this is why I did this. This is when AJ actually signed that capital, what the board approved, and then he physically signed it and dated it 2/8/21. So that's the date that I put on there for the spreadsheet.
Okay, I'll do it because it's just, I know we did it late, because otherwise, if anybody ever tries to go back and look at that, like I say, you'll never be able to find it. It'll
Yeah.
just be lost.
I do
You'll
agree with
look for a
Linda.
whole
I think we
year.
should use our board, the date we approved the board approved it in a vote. That way we know what meeting we can go back to and look at the agenda and minutes.
Sure, yeah. And it's actually easier for me if that's the agreed upon date, like what you want to use for that also.
And my last question for you,
I'll change that date.
Joel,
Thanks, Joel.
is if you take and move that 30,000 of Gordon's charges in 2020 back into 2020, how much is that going to increase our overage? That's going to increase then by that full 30,000.
Yeah, that's right, by about 30,000. It's
So
30,000,
we're going to be
$30.
close to 100,000
Yeah.
in the hole then for 2020. Okay.
Right, yeah. But keep in mind, you also gave up April dues, which set you back about 200,000 in operations. And
I
you
know.
also-
That's just,
Yeah.
I just
You know-
wanted to make sure of that.
And also in 2019, you funded snow removal out of UDR by
Yeah.
like 96,000, which you didn't do in 2020
Yep.
also.
so Linda, to your point about reviewing all these, that's one of our preliminary things to do as part of our budget process. Since it fits into, I mean, we would normally do it right at the end of the year, but.
Yeah,
we're
because you're
already
going to be
there.
looking at what you're going to be spending for 2021.
Correct.
Yep. There's so much open. Usually there's not this much sitting open
Sure.
at the beginning of a year.
And I would say it's probably an anomaly this year.
And
but
that's why I said we had a very bizarre end of 2020. And so as long as you guys are planning on sitting down, hey, it's all good with me.
Okay.
That's all I have.
I'm going to stop the screen share. Thanks.
Any other questions for the financials? All right. Keep it moving then, and I think it's still in your court then, Joel.
Okay. I'll stop that before I forget. So I think I can just go on to the PPP loan clarification. I think that's next on the agenda.
Yep.
Okay, so basically, so I talked about this in the finance committee. So which I'm talking about again in the board meeting. So just to give you a little clarification on the PPP loan. So we, as you saw, like as I pointed out on the balance sheet, we have 357,700 in the PPP loan liability on there. And so what that is came from our formal application process. And so it's 2.5 times of eligible average monthly payroll cost for fiscal year ended 2019. So that's how they award that on the PPP loan. That's their formula that they use for awarding that. And it's all eligible payroll. It just basically means, just put it in a nutshell, all payroll that's like 100,000 or less for the year is what they use for eligible payroll. Now the forgiveness of so that's the criteria how it was awarded to us at that time, 2.5 times average monthly payroll cost for 2019. And then the forgiveness, how it's based on, so the factors for forgiveness. So a few things that basically the main elements for us would be payroll costs, utility, and those are the two things that really apply to us. So the big thing is obviously going to be payroll costs. And for us, so our performance period, so we got the funds in May 2020. Our performance period, we had a couple different options. The one that we'll choose is the 24-week performance period, which puts the ending for that in November of 2020. So now now at this point, we have until approximately September 2021 to apply for forgiveness. So that's the time frame working for us for here at Sudden Valley. And it's going to be based off of payroll costs for us. Now, the big thing will be FTEs. So we have what's called our performance period. And for us, it'll be that 24-week performance period FTE-wise. And then our FTEs will be compared to what's called our reference period. Now, we have a couple options for a reference period, like option one would be February 15, 2019 to June 30, 2019. Option two would be January 1, 2020 to February 29, 2020. That would most likely be our most preferable reference period to choose. So basically what they do is they just look at what were your FTEs during the performance period versus the reference period. Let's just say, let's say in our performance period, we had 90% of the FTEs that we had during the reference period, then just to keep it simple, 90% of that loan would be forgiven. The loan and the interest would be forgiven for us. And whatever is not forgiven for us, if anything is not forgiven, it basically is a loan at a 1% annual rate is what that would be. So let's just assume nothing would be forgiven. Of course, that'd be ridiculous, but then it'd just be a 1% loan in a sense. Or we could, or if something wasn't forgiven, we could just say, fine, just take the rest of it back. But that's in a nutshell how the PPP loan will work for us. Of course, now I put on the memo in terms of, so the important thing, when the forgiven amount will then show up on the operating section of our 2021 income statement as essentially debt extinguishment is what it would be classified as, what it's going to be called. So that, let's just say all 357,700 is forgiven, then it would show up on the operating section of the income statement as debt extinguishment for that amount. So in a sense, it would be offsetting expenses. You could think about it like that. It's offsetting 357,700 of operating expenses for that year. It's kind of like a shot in the arm, so to speak, in 2021 on the income statement for the amount that's forgiven. Now, in terms of what you could do with that, well, of course, that'd be up to the board in terms of what you guys would want to do with that. Of course, I mentioned on the memo itself that was included in the agenda that it could just simply be, you could think about it applying to transitional costs, basically offsetting other costs that you might or will incur in 2021 for transitional type reasons. But in a nutshell, that is basically the PPP loan that we have at this point.
Question.
Sure.
So it does not have to be used for payroll. I mean, it's called the payroll protection. whatever. It doesn't have to be used for payroll. It can be used for other things.
Well, I mean, like the loan itself is, back then when they structured this program, the thinking was to keep, for like payroll related purposes, to keep running.
Right.
For us, the important thing would be how it got awarded to us, kind of like the bookends. It got awarded to us 2.5 times of eligible payroll costs for all of 2019. And then how can we get this thing forgiven? The criteria for forgiveness will be FTEs and utilities, basically, for us, is what they'll be looking at. So I know before, so like someone in the finance committee last time talked about possible penalties. The real kind of material penalty would be, if you want to think about it, this penalty would be a portion that wouldn't be deemed forgivable. Then that would revert to like a 1% loan in a sense, that portion of it right there.
I guess the title of it is confusing.
Yeah.
It should be called something else, but it clearly doesn't have to be used for just payroll. It could be used for other things. So I guess as long as we meet the criteria, I guess in finance, we were just concerned about taking the money and not needing it when there were other organizations, businesses that did not have an opportunity to get funding. And since we still have it set aside and we haven't used it, I guess the question was, do we really need it? But
now, yeah, of course, like back then. Sure.
What I would say is it was initially put together as an insurance policy. So to make sure you could keep your people employed, should that be affected? Well, we still are not out of the woods there, I would say, yet, although we feel a lot better, and I certainly do. But something, this could change and go backwards, and then we might technically have to furlough some people, possibly. That's kind of what it is. Once you qualified for it, though, you're right. Then once that time frame is up, then you decide what you're going to do with it. It does technically, once it goes into your income, does technically pay salaries, or can be put there and then replacing something else. But that's what it was for.
And then last question, if was it supposed to be used to keep you from laying people off? Because did we lay people off? And if not, then it sounds like we didn't really need it based on the payroll part.
Right. I think to that point, when you applied for it, you had no idea because it was so early in the program.
Right.
And as it turns out, that's true, but or at least as of today. But you didn't know until, I would say, into 2021 that you wouldn't do that.
Right.
So
okay.
If you decided to forgive, as an example, if you decided to forgive another month, if you had done that in 2020, you might have had to furlough some people to make up for that. So just an example, but you're absolutely correct.
Gotcha.
I have a question for Joel, please. So I understand, so it says that we can pay for payroll and utilities. So in forgiveness, do our utilities for 2020, how do they figure into it? Or is that only what we can use to support, and it's only payroll that determines that really factors into whether we get the loan or not?
Like when I mentioned utilities, meaning like utilities could be something to work into an equation to try to get the whole thing forgiven.
Okay. Is it just the utilities for 2020 then during that period, from when we applied for the loan on?
Yeah, it would be basically utilities during the performance period, like with payroll also.
Okay. Thank you.
Yeah.
Cool.
I'm not sure if Kim was getting at this point or not, but wondering after she was asking her questions so we originally took out the PPP with the idea that we might need to lay some people off, and this would allow us to not have to do that. Do we take out this loan to lay people off anyway?
Yeah, you cut out. Did you ask? What did you say?
Oh, did we take out did we get this money and then lay people off anyway?
People during actually I believe it was March or April when people were laid off during that period. Of course, now we didn't get these funds until May. So it was May 2020 when we actually got the funds. It was applied for back in February. So so it wasn't until May that we actually received this money for it.
But we knew we were getting the money before that point?
In terms of precisely when, I'd have to go back and see, but I'm not quite sure when we knew what the dollar amount would be and when we were getting it.
Okay. Did we pass up a month of, did the board or whoever it was last year, the couple of people who decided, did they decide to forego a month of dues knowing that that money was coming soon, or did they not know that the money was coming soon?
No, I don't believe they knew that, because I think that was decided for the April dues. That was most likely decided in March.
Okay, that's good to know. I thought that it was decided based on knowing that.
Oh, no, yeah, that wasn't the case. Because
Interesting.
March, because that decision had to be made before April rolled around, and we didn't even apply for this loan. It was in February when we did that.
Okay. And then were those people brought back after we found out the money was approved, or?
Well, the real people who were laid off at that time would be golf, and that was when everything was shut down at that point. And then as soon as golf was allowed to open back up again, they were brought back immediately at that point.
Okay.
I guess my question to follow up on Joel is, how did those people get paid? Did they get paid by unemployment, or did we use that? Were we supposed to use the PPP loan to pay the people we laid off for golf?
Well, when they were laid off, I believe they applied for unemployment benefits, which they would have been entitled to during that period.
Okay.
But during that shutdown period, we did not have these funds.
Okay.
Josh?
Dobbins, I just want to correct you on one thing. When you say we, the majority of us did not know about this until the community knew. So that was a decision made by a couple of people. Secondly, I think we might have lost an admin person during that time. I can't remember for sure. So I'm not sure how that plays into the situation with that loan.
The only admin person that we lost during the time was brought on through Express, a temporary. The person was not a member of full-time staff, like a full-time employee. It was temporarily through Express.
Okay, thank you.
Yeah.
Joel?
Something else based on what you said earlier, Joel. So the way you framed it was we get all that money, and if we didn't put it to the right thing, you said you could think of it as like a punishment or whatever, that you have to pay the 1% on it, right? But another way of looking at it is we got all that money, and if we didn't use it all, it's really just a punishment if we're not giving back what we didn't need. It's not like we're stuck with it and now we have to pay 1%. There's always the option to say, oops, didn't need it, here you go. Right? Or is it like a retroactive 1% interest on however long we've had it?
Oh, sure, yeah. It would be retroactive. Meaning if this wasn't forgiven, then it would be like it was 1% from the beginning.
Okay, cool. Thank you.
Any more questions?
I actually, by the way, on the December statement for one of the year-end entries that I put in was to accrue for the PPP loan interest on the operating section of the income statement. Since at the end of December it was not formally forgiven, so it's accrued and put on there. Matter of fact, it's, let's see. So $2,283 was put on the operating section of the income statement for interest expense for the PPP loan.
Justin?
Tiny bit off topic, but what is our interest expense on the surf loan?
So the surf loan, I believe from memory, but I'm pretty sure it's right. It's like 4.62%.
And what would that be like in a dollar amount in recent months?
You mean according to dollar amount, according to what balance?
Just what are we paying on a monthly interest?
Oh,
Or
monthly
even
interest?
a yearly interest?
Of course, I'm visualizing the last statement, but it's approximately around the $10,000 range. Actually, well, I'll tell you, like on the January income statements on the capital section, yeah, so well, on here is 2,684 for the interest expense for capital reserves, for the capital portion on the income statement.
Okay, so I mean, do you think we're in a position where we could pay that down more aggressively and save on interest on that?
Oh, that, I mean, that would be,
I mean, no, that's our decision. But
yeah.
okay, maybe want to be something we want to look at.
We can bring that to you as part of the preliminary budget discussion if you like. We can give you some options.
Okay, thanks, Glenn.
Joel?
Great. One more thing, just riffing off of what Justin was saying. This is sort of just like getting your opinion, I guess, but it seems like every time we need a loan kind of falls into our lap to some degree. We've got like more than we need, it seems, in loans, and we also have all the capital reserve. If we're able to, with not so much notice, get money that we need in that way, and we have also, I guess what I'm wondering is what's the point of like having our and I know that there's a point to it, but I guess it's more of a question of like the scale of it, having a pile of cash here in reserves and then our hole of debt over here. If seems like at any time we can get the money that we need, or sometimes when even when people say that they don't want the loan, seems like we suddenly have one.
Well, I think the government piece is a little different, but I think what the cash does is it allows you to make some decisions to leverage your money at a higher level. So where you have some payments banked, so you would feel more comfortable taking out a loan in the future, if that's what you wanted to do. But it also, more cash allows you to not take out loans, which keeps you more debt free, which is a real positive, I think. So gives you more options, I think, when you have a nice cash balance in capital.
Thanks.
Hey, Joel, you need
Yeah.
to realize that, yeah, we took out that 1.6, what was it, $1.65 million loan. But each year, I'd have to ask Joel, but we pay how much every year of capital that we can't use to pay back that loan? I think we're looking at what, 300,000 a year over 10 years. And every loan that you take out, you then encumber part of your SURF money that's being paid for the dues. The more loan you take out, the more money you encumber for usually 5-10 years. That's, you don't have that money then. And that can become dangerous.
It's
Yeah.
the balance of your decisions, right? Is if you decide that it's worth it, then it is. If you decide it isn't and it's too dangerous, then you don't do it. So absolutely.
Makes sense.
And interest rates aren't going to get much lower than right now. So maybe we should pay it back and borrow when we need to.
That's actually also, that's a line item on the, on that cash sheet that I pointed out before. It's, let's see here. Well, it's,
I know where it is.
I mean, yeah, I mean, you're looking at approximately around $200,000 a year in
Yep.
cash payments.
Yep.
$200,000 in interest?
No, just in payments. Just in, that includes principal and interest.
Sometime, and not tonight, I'll tell you the interesting story of where we were once in Sudden Valley when we had lines of credit and everything else. And basically, finally, a treasurer had took out and had a special assessment to pay off our debt. And until we took out this 1 point, I think that was back in the 80s, and until this recent $1.6 million loan, we've never taken out big loans since then. Because that's what was happening is you had dues money that was going into capital, and it was all going to pay off loans and lines of credit and all sorts of stuff like that.
All right. Do we have any more questions on the PPP loan stuff? I don't believe we're making a motion on this tonight. We can certainly, there's a lot of questions and stuff. So, if we have more questions, we can email them to Glenn, and we can compile some more answers, and we can always revisit this topic too.
Yeah, won't we get a final accounting from Joel when he finally puts all the numbers together and says, here's where we're at?
Well, when we apply for the forgiveness piece, we'll bring it back then.
Yep.
And then if we get forgiven, then you guys can decide what you want to do with it, including giving it back. It's totally up to you. But we don't have a hurry to do that at this point.
All right. Well, we can keep moving forward in our agenda then. Moving to capital requests, and I'll turn it over to Glenn and staff. First one is the Southern Court repair.
Okay, so before we jump into that one, the specific ones, I got a couple of general comments. First, I'd like to thank some of the board members and the community for giving us the questions in advance. That helps us give you a much better product, so we very much appreciate that. And then I'd like to thank Linda. You'll see on the staff report that we did cancel the pool request, and the reason is that Linda pointed out that the one we opened in 2020 very well may cover this. Well, it turns out, Linda, you're right. It did cover it. So we canceled the one that as per the finance committee, they asked us to look into that once Linda brought it up, and we did, and we canceled that one. So, but I wanted, for transparency, I wanted it to stay on there so everyone saw why we did it. We could explain why. Couple of quick things generally is what we have done to bring forward on a number of these is based on how past practice was done. And I wanted to highlight it. We highlighted to the finance committee, and I wanted to be able to do it here as well. So that's based on what Jacob and I could find and all the information we could find. We brought things back on past practice. We did it intentionally because we believe that we want to be able to be transparent and put things out in front of the board and the community. And then if they need to be fixed, we'll fix them. But we wanted to also get direction on how to do that from you as the board and the finance committee. One of the things that I have found in my time here is that previous staff usually had to make a decision or felt they had to. Either they needed to get the work done and so they bypassed the process, or they went through the process. But a lot of times they bypassed it, which means they didn't bring everything forward, or they put things into the program when they had money to do so, just to get the work done. And I'm not judging them in any negative way for doing that. That's just what they felt was the right thing to do at the time. And that's one of the things that we'll need to continue to work on, is to fix the process so things can move fast, so we can meet the need of the community, which I know is something that is near and dear to all of the board members, as well as the committees. So we'll go over each proposal one by one, answer questions for each of them, and then move to the next one. And the first one is mine, which is the Southern Court slide repair. Want to give just a quick summary of the project. At the beginning, we had a slide which was an emergency that we responded to in an emergency way, and got out there and did some preliminary cleanup and got that done. Then then the board put some more money in to go ahead and take a look at what really needed to be done permanently to make it safe. That work was completed. And then there was another analysis on to make it more a permanent solution. So the permanent solution is what we're proposing today. It has three parts. Part number one is the rock bolting that helps hold the hillside up in a more permanent, gives it a stability. So I wouldn't call it 100% permanent, but it is pretty close. As well, the second phase is putting concrete barriers at the bottom so that if stuff does slough off, it doesn't damage the roadway and stays behind there. And then the third part is to repair the roadway. So the total is a little over 189,000. One of the questions that we got on this was, this is an engineer's estimate, which it is, and why wouldn't you go get a bid? Well, I need to have permission to spend the money before I go get a contractor's bid, because if I get a full bid and come back, I won't have contractors bidding on any more projects, because it is an expense for them. Having said that, we're confident that it's going to come in under this, what we'll do is we'll go out and get the bid. The positive part to that is that we will bring the bid back through the process once it's completed for your approval before we expend any of the funds. With that, I'll take any questions.
I think, Glenn, there was a question too. I think we're both talking about the same member that asked about if the board would be reviewing the RFQ for that work. And I was going to say, I think the expertise is in PNW for dealing with the RFQ and knowing exactly what's going on. He's dealt with all this other prior work, and I kind of didn't understand that part of the question, but it was sort of how I felt about it, is that you've got an engineer that's looking at this, I don't think the board should be looking at the RFQ. The bids, yes, but not the RFQ, reviewing it.
Yeah, I think that's accurate. I also have expertise in this, so I'll be reviewing it with our project manager and make sure that it meets our needs. And we're working on that together. So absolutely, we wouldn't. If you wanted to see it and see what we did when we bring back the contract, we'll definitely keep that. We'll put that in the packet if that's something you want. But and we want to expedite this because it is emergency repairs. It's under emergency permit, and we're coming close to the weather window. So.
Yep.
Quick question I have is, so you said you're going to bring the bids back before the board. Are we going to would we at that point then amend the dollar amount to reflect the contract that we're bringing forward, or?
I would assume so. Yeah, I wouldn't ask for, to me, this would be a max and I wouldn't ask for any more. And if it comes in right around this, great, but yes. And that's what we've done on a couple of other things already is through the finance committee, they did amend. And we will definitely do that.
Justin?
Is there any portion of it that can be done in-house?
No, it's big work that even if we have some of the expertise, we don't have the time with the rest of the work we have to do. We would evaluate that on every job for sure.
Okay, yeah, I would assume so. Thanks.
All right. Any other questions? So we need a motion then. All right. I move the allocation from the capital roads account not to exceed $189,271.37, including tax, for the long-term stabilization and asphalt repairs for the Southern Court project.
Second.
Any further discussion? All right, call the question. The motion is just stated. All those in favor? Any opposed? Like it passes unanimously.
Thank you. And
All right.
I will hand the next one to Jacob.
Good evening, all. Tonight I'm presenting in your packet, looking at page, I believe, 25, is Capital Roads Culvert and Vegetation Control 2021. Work that started years ago on a recommendation to catch up on roads maintenance work. And that's outlined in the document there. I believe most people know how we got started down this road, but anyway, this request obviously is pretty extensive in that it starts in April and runs through September. It's a lot of activities that are detailed kind of month by month there, including a summary, how many staff we're looking at, and then the goals that we will hope to accomplish, and then the cost per month broken down because it is a significant investment and more than we've done in past years. Some of you that were at finance committee meetings saw or heard the conversations about where we were at in this process over the last few years and where we need to go. So that's a brief overview.
Do you have any questions?
No, but we need a motion for discussion before we discuss it. And then during discussion, yes, I have things I want to say. If you want me to go now, I will, but I'm saying normally there's a motion made and then you ask for discussion and that's when we bring things up.
Yeah. No, I think you can go ahead, Linda. I don't think we need to have a motion on the table to discuss it at the moment,
Okay.
but we
So
will need one eventually.
okay, so when I came to when I was at the finance meeting, I pointed out the budget in the reserve study, the new reserve study for 2021 has a CBC total budget of only $179,420. And if you approve this full measure, you're going to be $41,253 over budget. And some of these activities are considered regular maintenance, the roadside mowing, the clean green, and the firewise. That's not anything that was ever put in the motion that was approved by the membership back in 2016. And I think if you go through this, you're basically spending, people can call into question this work that's included in here that shouldn't be. And basically you're using capital funds for operational purposes, and you then have to abide by the RCWs that deal with that. You know, if you take out, for instance, if you take out all of the clean green costs that are there, because they're spelled out specifically in the memo, you know, that only takes you down to around 211,000 and you're still way over budget. You know, I don't know how much is in road mowing and firewise. Firewise, if we're talking about picking up piles.
So point of information, Linda. So all the firewise is in the month of April. So if you were in theory, if the board was not in support of that being on this, I mean, you could literally strike through April and that would cut all the costs out for firewires. Just point of information.
And I don't know. I'm just saying, I'm just worried that there are people out there that know that some of this stuff was never included in the measure. I went and dug out my stuff in case anybody wants to read what the members voted on back in 2016. I have the document here that I can read it, but I'm just concerned that, you know, we're 41,000 over budget and some of this stuff is like the road mowing, the firewise. And usually firewise, we got grants through was it the DNR? Somebody used to get grants for that to help us out with supporting that. But clean green, I thought we were, you know, I realized that we basically fund it out of ops, and I think it's $10 a load to drop off for clean green. So the members, you know, it's not free like it was this winter. But I really think we need to pare this down. And like I say, every year, although I've got questions about 22 forward in the reserve study, you know, there's actually the only amount that's covered by the special assessment is 113,141. And then somehow in the reserve study, it's gotten put in and there's an amount of, and it changes every year. But for 2021, there's a $66,279 amount that's for ditch remediation repairs contract. And I know Jake has some stuff in there for contracted work that has to be done. I'm not sure where, and Joel probably can answer, Joel Everling can probably answer that, you know, who decided on this, on that contract amount, because that's definitely, that 66,000 is beyond what the special assessment covers. And what's really even more fascinating, and then I'm going to shut up and you can discuss this without me, is the 113,141. I look back when we did it, that represents payers 31. That means that 33,132 people would have to pay for this. At the time in 2016, we had more people that were members. 3132 is now all of our lots. So this is 100% collection right now. It wasn't back then, but it is now. So it's just, I really think this needs to be amended. And I'm done speaking. Unless you have questions about what the membership voted on.
I have those and can bring those up if you want to see those. So if you don't, that's fine, but I have those where you can read them.
Yeah, and just point of reference, I'm indicating that all the items listed in this were items voted on, or may even be capital or this and that. I've tried to list that out and be pretty transparent on that. They're just activities that are currently like Firewise or Clean Green that are not funded. Even if you collected $10 per load, you're not going to pay for the Clean Green operations. I wish it would. Last year when we ran a Clean Green, you had a staff of 2 people, chipping up the limbs for 3 days. So, just point of reference, you're paying for Clean Green and Firewise each year out of these, or in the past has been paid for out of one of these capital requests. Just a point of reference.
Kim?
Is there a way to reword or reapportion the amount so that it's coming out of the various accounts, so that it's not all coming out of the capital funding for roads, but maybe divide it up and have a certain amount come out of roads, a certain amount come out of operations, so that it equals the 220, but we're just not taking it out of the one funding source, to kind of itemize what Linda's saying, the different sources of income for it.
Yeah, yes, there is. The challenge with operations is it's going to put you over budget because none of them were budgeted for. And I promise you that won't happen next year, but that's the way where we are. But you can pull those out, and you have UDR to be able to use for those at this point if you chose to. So that's one of your options. Or you can choose to use it out of operations and know that we're gonna have to watch it and maybe be a little over budget there. So that's you do have options.
Oh, you could do that. You could take the 179,420 out of the SURF account for this year because it's in the reserve study, and then take the 41,253 out of the UDR.
You very well could.
Yeah. I think one thing I'd like to point out is it's really great to see all this information here. I think these are definitely all services that the membership appreciates. And the most important thing is just making sure we allocate it out of the right pots of money, and that the work that we're classifying under certain, especially the culvert assessment, falls in line with what that assessment said. I'd be willing, we could maybe take this back and next meeting, bring it back with some of those, with those costs broken out. And then we'd have to figure out how much then would have to come out of like UDR to cover any residual. Because I do agree when I read the language of the 2016 measure, things like road mowing probably is not part of it, but any of the hydrovacking of the culverts, it appears that the auditor in the past has approved the overhead vegetation maintenance, although I contend that's not what the membership approved. In the ballot measure, it claimed nothing about vegetation, tree vegetation maintenance. And then The one thing I was unclear on, the clearing of berms, is that
Mhm.
kind of blading the shoulder picking?
Yeah, exactly. We did just a little bit of that last year, and just at one point of interest too, contracted work. So the contracted work would be bucket truck overhead work that we can't accomplish with our size bucket truck. Just point of clarification there. But on the road berms, yeah, that'd be the removal of the sand and organic matter buildup in areas classified as the worst. And the footage is there, but we would remove those berms so that water can flow off of the road into the culverts, because right now we fight that in some areas of issues with drainage, then coming down, then going down someone's driveway, or just not getting to the culvert in the correct spot. So yeah, there's quite an increase in that. I'll be honest, I think last year was the first year in the 10 years I've worked for Sudden Valley that I saw any of that activity happen. And it was on a very small scale. So unfortunately, that's why some of these costs are so high compared to maybe where the reserve study thought we would be, and therefore predicted funding for. So yeah.
Okay, because I think that type of work seems like it would fall in line with like kind of what the auditor says with the overhead vegetation maintenance and stuff, that it's, not being done in the same spot yearly necessarily. And so, but yeah, I think my big thing is I think, we need to figure out a way to fund this, but I think it would be appropriate to get it appropriated out of the proper funds, and break up some of the costs to show to justify where it's coming from.
So if we go ahead and break it down that way and we focus on, is your direction to do, use up all the funds and capital on the things that qualify, the others would come out of UDR at this point, or do you want us to try to do operations? Or do you want us to bring both?
If it's unbudgeted, it's UDR. Jake probably knows better what he's got in maintenance and landscaping,
Yeah, I mean, I agree. A lot of these activities are operational. I think we could all probably go down that road, and next year we'll plan that way. But yeah, we could look at that capital amount that's in the reserve study and tie that into how much we can do on capital type items, and then anything else like maybe clean green that's not budgeted in operations this year. I could put that into a UDR line, request.
Yeah,
that's what
and
I'm
I
hearing.
don't think, you could probably just use the one request and just have the motion
Right.
reference the dollar amounts to those exact accounts. Then I think that would suffice.
Yeah,
works for me.
yeah. And the Firewise has always been kind of tied into the overhead veg control because it's a good training time and you get staff up to speed. You accomplish the Firewise section for safety and people's desire to get rid of organic debris. So, that's why that's always been coupled with that. But yeah, I have no problem rewriting that if that's what everyone's comfortable with.
Yeah, I think the reality for the community to somewhat understand too is all of these things are operational expenses at a local jurisdiction. You don't do culvert cleaning or ditch maintenance under capital. And so, that dues increase that was approved is, a little bit, it's putting, similar to the rec special assessment when trying to fund operations programs under a limited funding timeframe, it poses challenges, and that's kind of what we have to deal with here.
So we'll get through this, and that's why we brought it the way we did, so you could have this discussion and give us direction, and then we'll bring it back, the whole package back as part of the budget discussion, so we can get the budget fixed the way that you want it and the community can understand it.
Hey, if I just see my roads mowed up here once this year, Jake, I'll be perfectly content.
That's your standard.
Yeah. Yeah.
Glenn, my standard up where I live is no mowing.
Yeah. Well, We'll propose something. We'll give you a goal, and then you'll hold us to it. And if you get halfway through the summer and goals aren't being met, I would expect somebody will come find me.
Knocking at your door.
Is there any objection from the board on revising that and bringing it back? Sorry, Josh, I just saw your hand go up.
No, real quick. John, are you there?
Yes,
Never
I'm here.
mind. Hey, we keep getting some kind of bizarre name in the list of participants. Can you keep an eye on that? It's a little distasteful. So,
Really? Okay.
Yeah.
I will. I'll keep an eye on that.
all right, thank you.
All right.
So we're gonna postpone this memo until our meeting at 4/8/21.
Yep. We'll bring it
Correct.
back to you.
Is there any objection to that from the board?
Does that still give us time to get the work done and it doesn't impact the work that's being requested?
We might lose our first April Firewise event potentially. I can talk with Glenn and Jacob to see if we could make that up somehow in May or something. Depends upon if their work plan would allow that. So
We'll look into operations as well and see if we can't make it happen on a short-term basis that one time and not blow our budget out. So we'll look at our options, but I think the conversation and getting it back to you in a way that makes sense is just as important. So.
And most importantly, being within budget.
Yes.
all right, well,
All right.
I did not hear any objections, so we will plan on that then.
Okay.
And yeah, we'll bring that back to the board at the next meeting. And I think I'm leaving it with Jacob.
Yeah.
And
We got another one here. So second capital request memo that I'll be presenting tonight, replacement. This is a CRRF capital request for the replacement of a road sand spreader. During snow events, we spread sand and salt on the roads for traction and to help melt snow. We had a unit purchased. The purchase dates are included 2016. This unit was purchased and it had a failure. It's a large plastic tub, and that tub cracked. Unfortunately, the part is no longer available. They don't make that model anymore. So on the quote, I asked him for some info that may have confused some residents, but basically on what that part would cost. So there's some extra line items in that quote, but it would have cost us several $1,000s still to kind of repair ours if the parts had been available. So that's not really an option. So, but we can get a newer unit or a new unit, a newer design that's all stainless steel. I think would work well for us. That's what we put in our last plow truck that we purchased. Total is $6,600, and so this is for replacement of that unit that failed.
any questions?
There was just one from a member that came to the board about why we're buying this now rather and have it sit rather than wait till later in the year. I know my answer, but I'm going to let Jake answer.
Yeah, so I don't recommend that. I mean, if you have a problem, best to get after it now. Prices generally don't go down. This is a piece of equipment we need for residents to just use their roads. Years ago, we had a 2014 capital plow truck purchase that got approved, and we ended up waiting 8 months for the sander to arrive. It arrived in August, and it was of great help in August. you know, when you have a broken item like this, it's not uncommon to have a 12-week lead time. We've got kind of a crazy world out there right now. We have an issue. It's fairly low cost. It's not going to go bad. And in all likelihood, it probably won't get cheaper. So I just recommend we move forward. That allows us time to get it in, you know, set up on the unit and ready for October, November, whenever we need that call. I mean, it's going to have to come out of this year's capital budget anyway, and now's the time while it's all fresh in our minds. So, but yeah.
Thank you.
No problem.
Josh, did you have your hand up?
I'm good, thank you.
All right. Seeing no more discussion, I think we can move forward with a motion then. I move to approve the allocation from the SURF account in the amount of $6,930, including tax and 5% contingency for the purchase of a replacement road sand spreader.
Second.
Any further discussion?
I do have one question.
Good.
Sorry, late to the party here. What's the contingency for?
Well, we're putting this on an older truck, and one of the points, we're putting this on an older truck. There's other items you might find when you go to put this in, just because it's not a brand new truck. So we need to make sure it's fully functional. But generally what happens, the reason I'm adding contingency to items like this is we just are generally on a 30-day window of when bids are good, and we may have price increases, and I just hate to come back on that. That's generally what it's for, just those small changes to pricing. If we're slightly outside the 30-day window when I go to get the bid, you know, technically that has happened in the past. So, but it won't be used. As I've always functioned under with Sudden Valley, it was always the GMs had to sign off on using contingency. That's not mine to spend. So we would continue with that practice, I imagine, with Glenn here now. So it's not like just extra money to spend. It just is a kind of insurance policy in case we come to some situation where the price is no longer fitting within the capital request.
Thank you. That was a very thorough answer.
Sorry.
No, that's fine. I appreciate it. I was just curious.
Yeah.
We
Yeah.
like thoroughness. Yeah, that's great.
Yeah, for sure.
All right, any other questions? So we'll call the question. The motion on the table was for the board to approve an allocation from the SURF account in the amount of $6,930, including tax, 5% contingency for the purchase of a replacement road sand spreader. All of those in favor, signal aye. Any opposed? Like that passes unanimously. All
Thank you.
right.
Thanks, Jake.
And thank you, Jacob.
No problem.
Thank you.
All right, moving on, strategic planning update. We have a workshop session 1.2 on Tuesday evening with the board and long range planning. And we'll be kind of rehashing and wrapping up our mission, vision, and values, and kind of trying to finish up that discussion. I believe everyone got their tours done this last week. And so if there's any questions resulting from those, please send them our way. And yeah, that's about all I got. Look forward to seeing everyone on Tuesday night to continue that stuff. Does anybody have any questions on that? All right, I I guess I'll just leave it with, please do your worksheets and spend some time doing some of the work individually. Just, it's important to do that, to make sure, all of our individual visions and ideas are meshing up with our collective statements. All right. I'll move on to new business, and I will hand it over. Are you doing the mailbox session, Glenn?
Yeah, I'll start it. Okay. So tonight we're just trying to frame this issue. This has been an evolving issue. We've done some research. We've got some background we want to give you, and then kind of get a general feel of where you think we should go. Do we need to do more research, that sort of thing. So that's where kind of we are. And with that, I'm going to hand it to Susie Brewster to take us through.
Hi guys, I'm back with another crowd pleaser, mailboxes. So before I begin, I want to update you that I got in one of the official quotes today. It's if we buy 20 at a time, we can get them at a rate of $1,595. That means we'd get the group for $34,611.50. That includes sales tax and delivery. And that would be, once again, for 20 of these things, that would mean 80 of them, which is 2/3 of the amount the USPS is requiring from us. They have the gates they want us to do in sequential order, sort of. They have about 4 gates they're most concerned about. But the bigger question I think Jacob and I have is where exactly to put these.
Well, the question is,
well, you can see, you can read in the memo that it's the key thing to remember is this is not all of our delivery folks. FedEx, Amazon, all of them delivered to your homes. The only one that doesn't is the Postal Service. So this is just for Postal Service only. So that's why we wanted to bring it to you and have you talk about it.
Is this question asking time? Oh.
I'm sorry, what was that?
Oh, is this question asking time? I had a question about the scope of this and which gates are affected. When I've seen these emails, this is news to me because I'm wondering if this is, not that it matters. I'm just trying to grasp an understanding of the problem because I don't have the problem in my gate. Is this by gate? Is it an issue that affects certain gates over others?
So from looking at the situation, it looks like we haven't been putting in parcel boxes the way we should have over the years. The same problem as a lot of things, it seems. But when it came to the pandemic, it increased the amount of parcel shipping so much that I think they're only delivering, 50% of packages to Sudden Valley right now. The rest are having to be picked up at their Orleans location, which is causing them a ton of extra traffic. This has been a problem for a few years now. I've heard a lot of residents complain about it. I know that the Postal Service pushed mostly to get mailboxes at gate 13 and then 5, and then I think 9, something like that. I'd have to look it up, but they have about 4 gates they're most interested in, but they want 40 extra per gate.
Mm-hmm. Yeah, okay, thank you.
Linda?
so how much money is the Postal Service going to give us toward this project? No, I'm sorry. I know the answer to that. I think it's like they keep saying parcel boxes. When we originally did the mailbox assessment, there were no parcel boxes included. It was just mailboxes for we residents. We had a small place called the Rotunda. I think even Jake remembers this. And there used to be a postal guy there, and that was a little building, and it used to be a gazebo. They enclosed it, and that, except we ran out of boxes because there's so many of us. And we ended up with a little extra money, and that's when we determined to put parcel boxes all over the place. But the original special assessment was never meant to expand all of this. I think the thing, I have a question and Jake can probably answer, and maybe Susie can, that this is the price of the boxes. They have special locks on them. Does that include those locks? Because when we got our individual post boxes, there was a whole separate, quite significant cost for the locks that went on these units because they're accessed by the postal service. And Jake, you're going to have to tell everybody how much it's going to cost to put in the pedestals that they all have to sit on. Because right now, the current existing pedestal, there's costs in here that aren't included. And then I'm going to end this by saying, we have that wonderful holding account that has $800,000 in it. And if we can't take any money from the mailbox fund, because it's supposed to be for just the individual boxes and stuff, then I would suggest the board put together a really good proposal and then ask for it to come out of that holding account because the board's allowed to do that.
Justin?
I believe Joshua was first.
Go ahead, my man. It's all you.
Thanks. I saw the one line there. It said, according to USPS, their trucks are not outfitted to handle our steep roadways. Have we ever asked for a reassessment of that? Their appraisal of that?
I do not know if we've asked for a reassessment.
I kind of find it hard to believe that at least some of the roads some of the places they want delivered to, they can't get there. And of course, accepting snow, but.
I will say I have a friend who works for the post office and he did say that to me, not saying that he is like speaking the truth or anything, but just
It's more they don't want to.
I think the post office and how they deliver to us has definitely always been, a hot topic of discussion. And there's always been talk of there's a contract exists where they say they don't deliver to our houses or they do or whatever. They used to deliver on Sundays and then all of a sudden that started going away. I don't know what ability we have to negotiate with them or not even.
That's a hard deal.
I think they get hamstrung with their budgets.
Yeah.
Yeah, the budget's not going to be
Everybody
the best.
mute. I hear background family noise. If you're not talking, please.
I think that's probably my son. Sorry.
But they are, we do know that their vehicles are not the finest at this point. And we also have heard that they're going to do some upgrading, so we'll see. But we could certainly, I think that's an option for us to talk to them. And if we met them in the middle, there may be some options there. So we could definitely do something like that if that's what you like.
Josh, then Joel.
Well, first, Jacob, do you prefer Jacob or Jake? Because Linda keeps calling you Jake, and I'm getting confused here.
Yeah, you can call me Jake, no problem. Years ago, I had an assistant working in Sudden Valley whose name was also Jacob, and so I kind of switched to that so that we would not get screwed up. But you can call me Jake anytime. You won't offend me. Don't worry.
All right, cool. I'll call you Jacob. Thanks. So Glenn, I emailed you about those Amazon boxes. I'm not going to go down that road right now, but do we have any idea of, because I know Amazon will send stuff through USPS and they also have deliveries to houses. So do we have any clue what those analytics are or those numbers of what is being delivered from Amazon to the mailboxes through USPS versus what's going to people's houses?
I don't think we do, but I imagine USPS has some numbers. And since it's federal government, we should be able to get those. So
okay, if we can, I'm curious to see what the difference is there.
okay.
Cool.
I was actually going to say,
You muted yourself, Joel,
Justin, what?
or something, or you're cutting out. I'm not sure what happened.
Can you hear me now?
Yeah.
Just let me know. So two things that make me hesitant to fully invest in Postmaster once, and one of them is an article from September last year that says 2 out of every 3 packages are now shipping for Amazon, like through Amazon themselves, not directly through USPS, and that's expected to continue. And actually, now that I'm looking at it, the 2 articles I'm looking at are saying pretty close to the same thing, just that Amazon's expecting to double in like 2 years the amount of packages that they're shipping on their own. So it is possible. I know that when I last checked, it was like 40% or something of packages were coming from Amazon. I'm pretty sure that's just gone up since I checked. And if Amazon is pulling away from USPS, it's possible that we could invest in a ton of new boxes. Right, as it could be that we're right on the top of a bell curve where everything's moving to Amazon and Amazon's moving away from USPS. And if so, we'll end up having way more. 40 mailboxes per gate is a lot to suddenly have if half of that even gets pulled away from USPS. So not that I think it would be great to make a decision on this by like end of summer. I don't know how long it would take for this project, but I think it's not going to pick up the packages wise. It's really a problem. Like it seems to me, in my personal experience, just from like October to December, especially, that it's the biggest issue. And if so, I would just hate to make a decision in March on something that even in a couple of months we might have new data that says that USPS is just going down in use, and that's just my only concern with the amount of money that we would be spending on it. And I think it would be great to start with a few mailboxes, but I also understand that getting them all done at once would probably save money versus doing a couple at a time.
Susie, were you expecting us to give you an answer tonight? Because that is.
Oh, no, absolutely not.
Okay.
No. So this is that paperwork that you have in this packet. That's not even proper quotes. The numbers I was talking about earlier, that would be a proper quote for 20 of them. But I plan to get more quotes for these mailboxes to see who has the best price naturally. More about this conversation, I think, is opening the subject and seeing where you guys want to go with it, because without knowing more, we didn't know which way to go.
I think Joel makes a good point. Going big may not be the best course of action. I'm also hesitant to just say the post office is like, you need this many more, and it's just like jump on that. But yeah, I think that was a good point, Joel. Linda?
I
then
was going
Josh.
to ask Susie, she had said that the post office sent a memo out on which of the clusters they wanted boxes at for sure. It'd be nice to know, maybe that's how you just go into this part way.
Yeah, they only gave me a list of about 3 or 4 gates. It was a casual conversation with the postmaster, but that is all the information that I have from them so far. And I will contact the postmaster before we go further.
Because it'd be nice, because there's some places like gate 5. I think there's room where you could put a couple of those, in between what's existing. But there's other configurations where it's definitely going to be real tight. Or impossible.
Josh?
Susie, this is just a random question, but I'm curious. Are the colors of these mailboxes taken into consideration with ACC and such when they're, or were they in the past when they were
Postal
purchased?
Postal gray is the color of the boxes we have.
Okay.
Joel? You have your hand up again.
Can somebody else go? I lost the thought.
I have a quick other question. You said the postmaster's requesting an additional 40 parcel boxes per gate.
Mhm.
So is the what you have pictured below the box has 4
Mhm.
boxes? Is that so you would need 10 of those at each gate
Mhm.
to accommodate what the postmaster is saying?
In their dreams, that's how many boxes they would like us to have. But we don't have to necessarily do everything they want.
And I remember pointing out too, Linda had pointed out about mailboxes. Years ago when I first started at Sudden Valley, we had a post office box location at the Valley Market, and I know a lot of items went there that were oversized that if we order now have to go in town. So I was telling Glenn that would be the ideal situation if we could get somebody to open up that again, but that's probably unlikely. But that probably added to the problem when that shut down, and then there was more packages trying to be sent out into the boxes.
And Joel actually, he asked me a good question about the larger custom mailboxes. And the reason that we don't want to go ahead with the larger custom ones is because that deal has already been expired with the USPS. They would have to re-okay the fabrication of them, and it would take 6 to 8 months plus a couple weeks lead time on all of them. They're very expensive, so it's just pointless.
Joel?
I'm really passionate about mailboxes, if you can't tell. But I had started emailing the board about this pretty much right after actually maybe before the board, the AGM last year. But other things were more important at the time. But another idea that I was having was if we could, as an HOA, try to get into some sort of collective agreement or collectively negotiate with Amazon to just make our neighborhood a UPS and FedEx only, or for oversized packages, only those shippers. If we as an organization, as an association, could contact them and ask them to, I don't know if that's even possible. If you guys,
I think that's illegal.
Oh, really?
Yeah.
Okay. Because I mean, members can do it on their own, and people have said that they've done it. It just takes hours to do for each person. So it would just be great if there was some way that we could, yeah, I don't know. I called them about it once to see if it was possible, and they never got back to me. So.
Are you talking about like the lockers, like they have at Whole Foods? Is that what you're talking about?
I'm just talking about if I wanted to, I could call and say, please have everything you ship to my address only be shipped through FedEx and UPS. And then they give you a really hard time about it, and you have to call a bunch of times. But eventually, I guess they might cave in and do that. The problem is that there's, like 2,800, 3,000 houses that would benefit from that happening.
Would it be a good idea or possible to have us be an Amazon locker location like Whole Foods, and then have a place where we have Amazon lockers and people can get their Amazon packages delivered there and bypass the post office and maybe skip the mailboxes, or add some mailboxes, but then also do the locker option?
The cost effectiveness would, we can do an analysis, but just thinking about it, you're gonna have to staff it. Some form or fashion, or possibly, or we'll have to monitor it. So we can do an analysis of it and see if it's viable.
Yeah, at Whole Foods, I don't see anybody standing around those lockers. I think they're self-serving.
They are, except they're in a secured spot, and where do we have to put that? So
I'll stick a camera on it.
Yeah, but Whole Foods they shut down their doors at night and you can't access it. And I think that's the issue here.
Yeah.
But the
So-
post office doesn't deliver to those Amazon boxes is also a problem.
They do not. They only
And that's
deliver
where
to
the
theirs.
analytics come in for the,
Yep. I think the analytics will help us talk about that too. Absolutely.
I'm probably saying the wrong word there because I'm in like web area right now, but yeah, the numbers.
That's what I would call it. So
Okay.
then we're both wrong, right?
I just thought I'd throw this out there because I'm a math nerd, but 10 at the price quoted below, which I'm sure we could get a better deal of buying in bulk, but at 6 gates worth of mailbox clusters and 10, you're looking at about $140,000 or so.
Was that the quote where they were $15.95 a piece?
No, that's 2,300. So
Yeah.
that's I'm sure we can get a better deal if we were buying in bulk, but just wanted to
Right.
throw out a number there to kind of, you're looking at $100,000 to do what the post office is saying, because the quote doesn't include labor either. So, but yeah,
There's
that's
the locks that
some
go
perspective.
on too, that we ran into an issue with, that because they get filled by USPS, they have to be their locks because only, they're the ones that issue the keys and stuff for those.
So, yeah, we would only be allowed to, or we would only install pre-approved, and that's what
Yeah.
we've got the estimate on. So then you don't have to mess with the keying because they're only pre-approved USPS boxes. So
I just don't know if they come with the locks, Glenn. That's some
They
of
do
our
now.
stuff before we had to get the locks and then they get installed separately.
they do now,
Oh, okay.
yeah, because too many people had that problem.
Well, when they say 40 additional parcel boxes, does that mean there's 4 per $2,300 unit?
They're not
do they want?
2,300. So if we buy them, earlier I was explaining that I got in a new quote today. That one you're looking at is not an actual quote. So the price would be $15.95 per unit if we get 20 at a time.
Okay, because I'm just looking at the picture and there's 4 boxes.
Right.
Yeah,
per
I
unit.
factored that in, Justin.
Okay.
It was like they're saying 40 per gate, so I did 10 per gate.
Oh, per gate. Okay. I
Because
didn't
there's
catch the
4
per gate.
boxes.
So I do want to point out that one reason that we are more interested in the USPS stuff on the administration side is because we do have to provide that service to residents of getting USPS items, while we are not legally obligated to get them their Amazon packages. Does that make sense?
yes.
All right. Do we have any other discussion on this topic? I think we're obviously going to be rediscussing this again in the near future.
Well, I have a question, AJ. I don't know if you guys can hear me because there's screamers in my background. But I was wondering, how is the US Postal Service telling us that we need 10 boxes in gate 1, 10 boxes in gate 2, 10 boxes in gate 3, 10 in 5, 9? I mean, that seems like such a random number. I mean, gate 3, 9, 13 seems like the biggest chunk. So 10 over here and 10 there. I mean, that seems like we're just, am I out of my...
Be great to have something in writing from them, make them go on the record and say that, that official,
Right.
this is what we think you need. So it's, they've actually thought about it.
I can
Right.
definitely work on that.
Yeah, they can show some concern. I mean, they legally have to service us too. So thank you, Susie. You worked really hard on this. I really appreciate it. Thanks.
Oh, no worries. And once again, this is very preliminary. So hopefully we can move from here and figure out a great solution to this.
Absolutely. Thank you.
Getting the postmaster on the phone is like catching a falling star and he just kind of yells at you and then hangs up. So
I know that. I used to do addressing for the county, and I had to deal with the postmasters and their elusive beings.
Such a weird name.
And you
right?
can't get their contact information very easily without knowing the right people. All right. Anything else on this topic?
Just a quick follow-up that the cost analysis that you were thinking of, Glenn, will factor in perhaps an Amazon locker situation, because if we can get Amazon to help pay for that, and most of those packages are from Amazon, it would offload what the post office is doing, and there may not be a need to add so many boxes.
Yeah, true. I think we've taken some notes about what we need to look at, and when we bring it back, we'll bring all the options you mentioned and anything else we can come up with, and put the costs together with all of them, and then you'll be able to give us a better idea of where we go.
Okay, thank you.
Yeah, I think it'd be great to know some details on the Amazon lockers too. All right. Is that anything else on that topic? All right, we can move on to the next item, which is the reserve study contract.
Bye, guys. Thank you.
Thank you, Susie.
Thank you, Susie.
Thank you.
You want me to?
Go ahead, Joel, or Glenn, or I'm not sure who's.
It's you, Joe.
Okay. So you'll see in your board packet the memo and the reserve study proposal that we got from Association Reserves. Actually, the memo is a pretty good summary of the whole RFQ process, the request for quote process. So I sent out a request for quote to 8 different firms, reserve study firms, 7 of which were in the Pacific Northwest area, 1 in Beaverton, Oregon. We received back 3 responses. Now we set a preferred, so the first one that we asked to do was a full level 1 reserve study, a refresh of our full level 1 reserve study. Then we asked for a preferred date to have that finished by July 15th of this year, 2021, obviously. One out of the 3 responses, one firm responded and said they wouldn't be able to come up with a quote within the RFQ deadline that was given. But another firm did respond and say that it would be difficult for them to complete a level 1 by July 15th. And if we wanted them to do it, it would be costly, and they anticipated that it'd probably be around $50,000 to do that. Now, we got a response back. We're lucky, I think, to get a response back from a good firm, Association Reserves. They have an office in Washington. This is a large regional firm. So they have offices in Arizona, California, Colorado, Florida, Hawaii, Nevada, North Carolina, Texas, and here in Bellevue, Washington. They conducted approximately 50,000 reserve studies in their firm history. And the president of the Bellevue, Washington office is overseeing approximately 10,000 reserve studies. So it's a good qualified firm. Now we asked for a couple different quotes in terms of, we asked how much would it cost to do just give us a full level 1 reserve study, that's it, just full level 1. And then how much for like a 3-year quote. And so the Association Reserves has given us and I talked this, his name is Jim, the president of the Bellevue office, called me, and so I personally talked to him. And so he said that he felt they would be able to conduct a level 1 reserve study by our preferred date of July 15th. And one pricing option is a single year engagement for $24,800 for the full level 1. And then there's a second option, which I think is clearly the better one, which is what they call a 3-year loyalty engagement option. And that's flat rate of $10,130 per year. So we would pay that each year for 3 years. And that includes the full level 1 reserve study. And then in years 2 and 3, the level 3 studies, which is, it's a no site visit update is what it is. That is, of course, course, I recommended that it would probably be better for us from a cash flow perspective to go ahead and just select the 3-year loyalty update engagement for the $10,130. But in terms of like the desire to get a full level 1 reserve study, especially by July 15th, at this point, it would probably be recommended to go ahead and accept this engagement from Association Reserves. And that pretty much covers the reserve study.
Josh, then Kim.
Joel, you said how many? 8, 9 that you sent out?
8 of them.
And you received 3 back. Did you receive any other correspondence from any of the other companies?
Well, just emails, meaning like emails just asking just like general questions. And then this one firm who did email me then said, well, they felt they wouldn't, basically they weren't going to give us a quote. They didn't feel they had enough time to come up with a quote. Then the other, of course, email correspondence was about letting us know that it would cost approximately about $50,000 they felt to come up to be able to staff a level 1 reserve study by July 15th. And we
Are
did
there
not
any
get,
that you did not get any response from?
yeah. So did not get a response from the other 5, basically out of the 8. So the third one is Association Reserves, who gave us this official proposal that you see.
Would it be, don't get mad at me, Joel. Would it be worthwhile to contact those other ones that you didn't hear back by phone or anything to make sure that they saw this stuff, or to get some other bids?
Well, I mean, like that could be sure. Well, meaning like if you didn't vote on this now, yes, that could be done, but then it would push things off by like a month for certain before this was signed, or before we were able to accept any engagement from a reserve study firm.
And they won't be able to make, anybody else won't. One of the reasons they didn't look at it is because it either wasn't enough money or they couldn't make the timeline. So if you delay it, you won't make your timeline either, and you won't have your reserve study done by your budget.
Good question.
Kim, then Brian, then Linda.
So I have looked into the president of this company, and I know that a lot of the board members here ran for office because of the law that was passed in 2018 by Wukiwa to make it difficult for community members and HOAs to vote down budgets. And I understand that this president is a member of CIA who is supporting Wukiwa. And so I find that in conflict for why I ran for the board. And so I would be in agreement to looking for other bids. I would not want to hire someone who is part of CIA and that supports Wukiwa. So
I totally understand that, but I want to let you know most of them probably are.
Okay.
Yeah. So you're not likely to get that, and no one else bid. So we're not gonna, if we go out to bid, we're not gonna get any other bids in a timely manner. We'll have to go beg people and go into more of a national search, and then the cost will go up too. So again, all options that we will explore if that's what you want us to do, but I just want you to know.
I find it hard to believe that there's not a reserve study organization that is not a member of that, but you might know better than me. It's just that goes against why I'm here, but I hear what you're saying.
Yeah, and I also think we don't, that's their organizational, that was their organizational stance. That doesn't mean all the members were for that. It just means that became their stance. So that would be another point.
President speaks on behalf of CIA, so he's
Well, we're-
definitely, he's in the mix. He's not in the fringes. This particular person is the poster guy. So
Fair enough. Fair enough.
just for the conversation.
That's fair enough.
There's some other affiliations here that concerns me a little bit, throws up red flags. Sorry, I'm out of line here, but I just wanted to piggyback on what Kim's saying. I know most of these people will be CIA, but there's some other stuff in there that's a little bit concerning to me, but sorry.
Yeah, I was just going to express the same concerns for sure. There's a bunch of red flags, I thought, doing a little bit of research, and I feel that we should explore some other bids if possible.
Linda?
I think my biggest concern isn't so much, let's see, I've been here long enough to have seen 3, if not 4 different reserve specialists. My concern is that we just had one done in 2020. We used to have them done only every 3 years, and we used to do our own internal updating. Since then, we have gone to having one level 1 and then have whoever does that come back and do the follow-up the other years where we have to do the updating before we're required to do another full review. My question is, in the reserve study, I don't see anything for any money to be spent on reserve study until 2022, and then that's only for $8,077. And I don't know where we came up with these low figures, because I need to go back and look at some other stuff, but I know, you're looking more at these kind of numbers of the 20-some $1,000 range to do a decent full level 1. And I was hoping maybe Joel could talk to this. I'm just concerned that we're doing this again and there's not anything allocated for it. So I just, I'm wondering what we're doing here. That's all.
I think referencing a reserve study that has a lot of flaws in it is probably not going to benefit us. Like you said, it didn't even cover our needs in this capacity, as far as planning of funds and things like that. And that's, a big reason why we're getting a new one and doing a new reserve study.
Okay.
So, and to that point, Linda, the RCW does not require you to do a type 1, level 1 every 3 years. It's a level 2 every 3 years. So they have to.
I'll go back and look.
No, I go ahead. I just read it, but it's not a level 1. It's a level 2. You have to do an on-site visit. You do not have to do a level 1, and we verified that as well. And so they have to come do a site visit every 3 years.
Yes.
But once you do a level 1, you're good. That of course lowers the cost. But again, to AJ's point, if you're not comfortable with what you have, that's a different point.
Yeah.
I also think I just want to make sure you're prepared that we may have to do an internal update if we can't find anybody for this year to prepare and do a level 1 next year. If we deny this one. And again, we're okay with that. That's fine by us. We just want to make sure you're comfortable with that.
So the discussion has evolved, it appears, into potentially getting some additional bids, or it sounds like too, maybe if we adjusted our July 15th expectations, Glenn, that maybe we could get some additional participants to bid. And maybe that was a precluding factor in some of the lack of response and some of the unreasonable bids that we got, for lack of a better word.
It's a possibility. If we don't put any limit on it at all, they'll come back and tell us when they can get it done, and it may or may not meet our prime timeline. However, to the point I just made, if they could do one and we've got one underway, you always have that opportunity to make sure you can use a good level one in the next budget process, which I know is not what you all want, but it gives you another option to bring them in and get them working on it. So Joel will call them all. I do want some direction though, because if you're not comfortable with this one, I want you to deny it. Give me a motion that votes it down, and then we won't go back to them. We'll just tell them that they're denied. That would make it a lot easier, because if you just hold that one on the line, then we're just stringing them along, and I don't think that's fair either if you don't want to use them and you're not comfortable with that.
I saw Josh's hand and then Joel's.
Well, I mean, we're still in the bid process, so I think we can, if we can hook someone else in, then we can let everyone know, you know? But go ahead.
True.
Sorry, Glenn.
No, you're right, except we put a timeline on the process.
Yeah,
So
that makes sense.
Technically, we're not, but we can reopen it and say we didn't get enough bids. If you want to hold these guys in reserve, so to speak, then you could we could just say you were the only bidder and they want another bidder, and we could go out again. We could do that too.
I know I've talked with you a little bit about this, Glenn, with RFPs, but could we maybe do like a newspaper advertisement or something too, as well, or something?
Yeah, we'll go into the
Daily Commerce Journal was what we were thinking of.
Yeah, we had all the words, we just didn't have them in the right order. So yes, that's where a lot of people are watching, is the Daily Commerce Journal, and we will definitely advertise there. And Joel will call all of them, all the ones who we sent. So we can do that.
And then just put non-CAI, please not apply.
Again,
Tim, that's not the problem, right? It's the red flags as a whole, you know? I mean, most people are going to be part of that organization that are doing this for HOAs.
Because and we are still technically a member. So.
Mm-hmm. So Joshua, when you said that's not the problem, what can you tell me? What red flags you're seeing other than that?
Well, I mean, there's a lobbyist on there that lobbies for him. That's a lot different than a HOA that, you know, or a reserve deal that's a regular I'm losing my train of thought here.
Oh, okay. I thought that's what I was saying, that this person is a lobbyist. I thought we were saying the same thing.
Sorta, yeah.
Okay.
I mean, a lobbyist is a lot different than us being, you know, signed up to get a million emails from CAI every day, you know?
That's true. That's very true.
And I mean, it's a very tiptoey political issue, because so many people in this community have been drained from what some people have put us through with the law and pretty much taking our voice away. So I'm so glad you brought that up, Kim. I mean, it's a big issue.
Brian?
And I think we all agree that, that how important the reserve study is, but just the red flags are a concern. And yeah, if we could get some more bids, that would be fabulous.
We can do that.
Thank you.
Joel?
If we are going to, I think I'm right there with you guys where I think getting this done right and done in a way that the community can trust is more important than getting it done quickly. If we are going to adjust that date, if we aren't going to say to this specific bidder that completely reject them, if we're not going to say that tonight, then we probably want to move the goalpost for everybody, right? Date wise, Glenn.
Yep, correct.
Which would then perhaps get them coming in with a different bid anyway. Just something I'm sure that you're thinking of that as well. But regarding this bidder, if the thing that would make me hesitant to approve them on top of what everybody's saying, just with the red flags that people are seeing, if we do go with them and there's any issues found, it's just very unlikely that we would be asking them back to do the next reserve study and do continued business. And it just seems like not fair to them even to put them in that position where they're walking in, unless we want to be very upfront with them and say, here, if you would like the job, bid on it. Just so you know, a bunch of people might be very critical of this, and it might just be fair to let them know that they are going to be under a magnifying glass just because of Okiowa and the effect that it's had on this community.
If we have that discussion, they may pull out, which wouldn't bother most of you. It doesn't sound like so.
I think you could.
Way,
I think.
Yeah.
Sorry, go ahead, Joel.
Oh, at least in that way, we're preparing them for it. And if they go into it not knowing that, I'm almost certain that they would face some of that scrutiny from people. And if we did get him in, ended up liking him, but a lot of people weren't fans, we could invest all of that into somebody who realizes that their end of the bargain wasn't as good as they thought. So it's a lot to consider for us and for them. Of course, I'm mostly thinking of us, but
sure,
you want to consider the other end of the negotiation.
I think, if you go back and you change the July 15th and make it more open-ended, it probably would be appropriate. You could just go back to this company and say, look, you're the only proposal, there's nothing wrong with the proposal, but the board wants more proposals to choose from. And so we're, comfortable opening up the time frame a bit to try to accommodate that, and then allow them to kind of resubmit. We could get a cheaper price. They might have some rush costs baked into the $24,000 mark that they got there, whatever, to meet those demands that we had. And so.
Yep.
All right.
Sounds like we got our direction. So thank you.
Is there any objection to moving forward in that direction?
Oh,
All
by
right.
the way, I should point out to you too that a reserve study is a required supplementary disclosure of the audit report. So let's just say worst case scenario, we don't get a reserve study until November or December. Well, you won't get an audit report until those dates also as well. The final audit report.
Except if we go ahead and do a quick update on our own, which we can do, then the audit could take that into account, and then we would move the other one to the next year. So we have that option. RCW allows us to do that.
And Joel, we just had one done for 2020.
You're required to do one every year according to the RCW.
But isn't it 2020 that they're auditing?
That's right. Yeah. But we can't, Linda, we can't use that report for the 2020 audit. The auditors and I have already talked about this.
Okay, it's just, okay.
So Joel and I will figure that out as part of when we bring it
Okay.
back to you.
It sounds like Glenn has the experience and knowledge to help us navigate our wants and needs.
And you're clear about them, so that helps me.
Thanks,
All
Ken. I
right.
know this isn't like a fun issue.
Oh, it's, again, we want to make sure that you have a reserve study that the community and you can have confidence in. And that's the most important thing. So,
I mean, my eye's going to start twitching from PTSD of these last couple of years. So
All right. On that note, is there anything else on that discussion? I think we're pretty much squared away on that. So I will move into the next agenda item and I'll pass it on to, looks like Joel's doing that one.
Okay, so this is a resolution to make Glenn a check signer. So basically, what's explained before, like in the board of directors memo, the background, it just basically, just to sum it up, the general manager is a bank signer here for the organization. Now, since Glenn is expected a prolonged tenure here, it would definitely increase operational efficiency to add Glenn as a bank signer. That way he can fill in as like a second signer on checks, meaning operational checks. And he can also take care of operational business like across the street with WECU or with CIT if needed. Like then we don't have to try to get one of the executive committee team members who, most likely is going to be busy at work during the day or in terms of just trying to schedule them to come in to do something. It would definitely increase operational efficiency to add Glenn as a check signer while he's here. So in a sense, this signed resolution is just exactly that, just add him on to the banks as a authorized bank signer.
Yeah.
Okay, here comes the elephant in the room again. There's a board policy, 2016-12, that says that be it resolved that the general manager has authority to sign operating expense checks. And I think before we go doing a brand new resolution, you need to go back and look at this policy that's on the books.
But is the difference that he's an interim general manager?
No, it says be it resolved that the general manager and Glenn is our general manager right now.
Okay,
When
I
we
just didn't
introduce
know
him,
if the title made a difference.
it says an interim, that's true. But, and there's a lot of things. The policy is well written and divided up. Not that I object, don't get me wrong. I'm just saying it's already there.
So what harm would be done if we sign this for him just being more specific that he's interim?
Whatever. Just saying there's already a board policy here. Some people may say that if you have a resolution, then that nullify, it's like, I don't know.
So it's your contention that this is redundant?
Yes.
Okay, so then a resolution actually just reaffirms it.
It's just if you look at the policy, it's much different than this resolution. It states where in the bylaws that the board is given the authority to go ahead and assign the general manager signing privileges and also to act on, execute instruments and to deal with accounts and that sort of thing. Just saying, it's just far more complete.
Wait a second, Linda, would it it would nullify a previous resolution if the language is different, right?
I don't know. You know, then you've got one saying one thing and one saying the other. And I'm just saying, it all says it here in the 2016 policy. He already has that authority. It's already been given. You know, that's, you know, and maybe it's time for the board to go back and start looking at some of these resolutions. It's kind of like the audiovisual one that AJ brought up at our last meeting, is to be taking a look at some of this stuff that already exists.
Well, couldn't the policy be updated to say, gives the general manager and or interim general manager the authority to sign checks so that it's completely clear and there's no issues in the future?
You could, but then you would have to vote on it and supersede this one that exists. That's all.
I'm sure we can vote. I don't think we're incapable of doing that.
I'm just thinking, is there a way to just have this one with dates on it so that it's like a complete, it just has dates like starting when Glenn started, and then, you know, for the contract so that it's names Glenn specifically, if that matters.
It would be a good idea if you did that for my term, because I am interim, and that just makes it clear that we came to you and asked for that, being the interim. Now,
And
to
you
Linda's
can
point,
put some language in there that it doesn't supersede the previous one, blah, 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 whatever reference the one that Linda is, it doesn't negate or void it. Does that sound like some good legalese, Justin? It's just to add some dates to it and say it doesn't, you know, invalidate the previous one, just so that we have something current and
I think if we, I mean, it already has Glenn's name on it. It states that he's interim. But if it made everyone more comfortable, I would say that it's probably a good idea to say till the end of his tenure. I don't expect Glenn to go keep writing checks on us after he leaves, but so.
I can guarantee you that's not going to happen.
Joel?
Is there any situation where we wouldn't want an interim general manager signing checks? Is someone going to appoint an interim general manager that we don't trust to sign checks?
I think it's possible. You know, like when we had Brian as our interim general manager in the immediate transition, we didn't push down all authorities of the actual general manager down to him at the time. So kind of a board decision, case by case type thing.
And in that case,
we say that Brian couldn't have handled that. That's just kind of the way it transpired.
In that case, if I remember correctly, we specified what was and wasn't. We specified the roles of what the board was doing and what we were doing, right, in that situation.
Yes.
And that's what we're doing here as well, right? We're specifying what the interim general manager can do.
Yeah.
Yeah, so it seems like we're just following the same precedent of what we did before, where we didn't assume that he could or couldn't, right? And we're just to Linda's point, he may have been able to say that under existing policy he was able to sign checks, but we clarified to say that he can't. And in this case, we're clarifying to saying that yes, Glenn can.
Yeah. And I think one thing, if we just make a simple motion as stated there, it's not quite the same as like, you know, the policy is like a formal drafted, you know, whereas therefore we would not be superseding the policy by just making a motion to grant Glenn that authority temporarily. I do not believe. So
Just saying, there's
'cause
already
we're
a
not
policy
making
there.
a motion to approve a new policy or to supersede any existing policy. We are simply making a motion to grant authority. It's similar to giving authority to Glenn to sign a contract.
I think the thing that's nice about the policy that your resolution lacks is where the board has the authority to even give him those permissions. And that's what I'm saying. None of you have looked at this policy, but it talks about where the board even gets the authority to do this sort of a thing. And that's why I'm telling you, it's already there. And it says, whereas the SVCA board can designate a managing agent to execute such instruments. And it talks about the section in our bylaws that gives the board that authority. This resolution that you brought up doesn't do that. And in some instances, it's very important to know where the board gets their authority from, rather than just having a meeting and go, yeah, let's do this.
What I'm saying is we're not
Parliamentary
passing a
procedure.
resolution, we're just passing a motion.
No, this is I don't know. Well, I don't know. Do what you want to do.
Well,
I'm
and
just saying
Joel,
it.
did you bring this forward? Is this something you need to be able to present to a financial institution, to prove he's an assigned signature?
Well, I brought it forward because I was asked to bring it forward just to make the board feel more comfortable.
Okay.
Just formally documenting Glenn being added as a bank signer.
Okay, so this isn't like something you need to
Oh, no.
show to a bank or anything. Okay.
Yeah, like technically, the executive signers could just fill out a new bank signature card and then just add Glenn's name to it and for him to sign it, then he would be an authorized signer. Kind of going back to Linda's point about since he's a general manager anyways, but or the acting general manager. But this is literally just to formalize it, just to document it, to just make people for a comfortable kind of aspect, I guess you could say, in terms of just recognizing adding Glenn formally as a bank signer.
So what you're saying is we're making a mountain out of a molehill at 9:42 p.m.
Exactly.
Thank you. Can I, oh, never mind. I forgot. Josh summed it up.
I move that Glenn Akramoff, That's
it.
one of those things I didn't hear anyone tell it to me first when I decided how it was said. So then in our interviews, you said it. And I'm like, I've been thinking in my head wrong the entire time. And now I have to fix that.
And now
All
you
right, other guy with the weird last
wrong.
name.
Now I say it wrong.
Right.
I feel for you. My last name's equally as bad as yours. So I've spent my whole life repeating my last name for every teacher I've ever had, except for the German one.
Yeah.
So I move that Glenn Akramoff be authorized as a Sun Valley Community Association bank signer as the Sun Valley interim GM for the tenure of his appointment.
Second.
All right. Any further discussion? Call the question. All those in favor? Any opposed? All right, that passes. So we have a closed session here quick before we end the meeting. Do we have a motion to move into closed session?
I have a motion to move into the quick closed session.
Second.
All right, all those in favor? All right, we'll see you over there.
It's usually me we're waiting for.
You ready to go?
There are some bleary eyes.
Who are we waiting for? I think isn't everybody here? Rachel? Well, Rachel's here.
I think we're good, right?
I think we're here.
Do we have Brian? Yep, there's Brian. You were in the corner. I'm sorry.
I've been late before, for sure.
All right. Do we have a motion to come back into open session?
Move to come back into open session at 10:04 p.m.
Second.
All those in favor? All right. Passes unanimously, and we'll move into our property owner comments before we adjourn.
Okay, do have a few people still with us, and Nancy does have her hand raised. I'll go ahead and bring her over at this point. Just go ahead and give your name and address, please. And we can get that to work. There we go. Go ahead, Nancy, you can unmute now.
Hi, Nancy for Sandalwood Circle. Just wanted to remind all you smiling faces about the Wednesday, March 31st Joint Council Lake Watcom Management Program annual meeting. And you can go on the website and see instructions on how to log in and a short discussion of what things you might want to think about or hear about when you're watching. So good night.
Thanks, Nancy.
Thanks, Nancy. Have a great evening.
Thank you, Nancy.
Thanks, Nancy.
Okay, anybody else for property owners' comments?
All right, let's call it. Someone give me a motion.
Move to adjourn at 10:06 p.m.
Second.
All right, all those in favor. Have a good night, everybody.
Good night.
Thanks, everyone. Have a great